Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday, 25th of March, recording the video today, 7:45 p.m. Eastern Standard Time almost. The main wave count was expecting a continuation of upward movement for a few more days. The alternate obviously was expecting downward movement. We've got a really strong down day which invalidated the hourly wave count for the main wave count, and it looks like the alternate might be correct. What happens tomorrow though is absolutely crucial. Price is finding support exactly at that blue 2-4 trend line on the daily chart for the main wave count. If that trend line is breached tomorrow or the next day, I will discard that wave count in favour of the alternate, but we should always assume that the trend remains the same until proven otherwise, and we do not have enough downward movement yet to confirm a huge trend change. So we should assume until we get that confirmation that the trend remains up. Let's have a look at the main wave count at the daily chart level. It's still the main wave count because at this stage we don't have any confirmation for the alternate. The main wave count sees an intermediate degree ending contracting diagonal for a fifth wave coming to an end. The diagonal is contracting, the third wave is shorter than the first, the fourth wave overlaps first wave price territory as it should for a diagonal, and all of the waves subdivide as zigzags as they should for an ending diagonal. For the fifth wave we have a 5, 3, and we need to see a complete 5 up for the final C wave. At 2178 it would reach equality in length with minute wave A. I'm still expecting for the main wave count upward movement to overshoot the blue 1-3 trend line. That would be the most likely place for the fifth wave to end, and that's another reason why this is still the main wave count. Within minute C, we would now have one and a deep second wave correction. Downward movement is finding support perfectly at this dark blue 2-4 trend line. Because diagonals almost always adhere beautifully to their trend lines, I would expect for the main wave count downward movement to find strong support here and this to initiate a third wave up. If this blue trend line is breached by a full daily candlestick below it and not touching it, I will discard this main wave count in favour of the alternate. The price point which invalidates it is at 1980.9. If minute B were to continue further, it can't move beyond the start of A, but that will only be an extra confirmation point because this wave count should be invalidated before that price point is breached if this blue trend line is breached. Let's have a look at minute C at the hourly chart level where it begins here, this point here. From this low to this high, it just doesn't subdivide very well at all as a 5. It really does look more like a 3, and at that stage this favours the alternate wave count. It's possible to see it as a 5, and sometimes the S&P's waves look like that. Sometimes the fourth and second waves aren't perfectly in proportion and its 5s look like 3s or vice versa. So if we have an impulse up here, we then have a deep second wave correction to follow it, we would be expecting for this main wave count a third wave up to begin tomorrow. It should move beyond the end of the first wave, and a new high above 2114.86 would provide quite a lot of confidence in this main wave count at this stage. Here's the blue 2-4 trend line from the daily chart. I've made a parallel copy and pulled it down to sit on this low here and almost on this low here, and that again is where downward movement is finding support. If this wave count is correct, then that should initiate a bounce, and a strong third wave up should begin tomorrow. Minuet 2, if it continues further, can't move beyond the start of 1 below 2039.69. If this wave count is invalidated at the hourly chart level, that would also see the blue trend line breached at the daily chart level, and I'd probably discard it. At the daily chart level, this is the alternate. It's identical to the main wave count right up to this point here. And what if the final zigzag was over here, falling short of the 1-3 trend line? For contracting diagonals, the fifth wave very commonly overshoots that trend line, but sometimes it does fall short. So this is a less common scenario, so it's an alternate wave count, and it requires confirmation if we are to have any confidence in it. It's also calling for a really huge trend change. For the bull count, the trend change is at primary degree. For the bear count, the trend change is at cycle degree and calling for a huge market crash. For such a big degree trend change, we really do need to wait for some confirmation. We should always assume the trend remains the same until proven otherwise. This wave count requires the main wave count to be discarded with a breach of that blue 2-4 trend line. It requires a new low below this point here. It also requires a new low below 1980.9, and it requires a close of 3% or more of market value below the lower of this double aqua blue trend line. This aqua trend line is not an Elliott channel. This is a traditionally drawn technical analysis trend line as outlined by McGee in that classic technical analysis of stock trends. To use it in the manner outlined, we have to wait for a close of 3% or more of market value, which is about 64 points at this stage, and that would confirm a sizable trend change either at primary or cycle degree. It won't tell us whether bull or bear wave count is correct. It will only tell us there's been a substantial trend change. For this bull wave count, if the new downward trend is a primary degree fourth wave correction, it should be expected to last about a Fibonacci 55 or 89 days in total. It should move the price substantially lower, and it should take price out of this black channel, which is an Elliott channel drawn on the weekly chart, around primary wave 3, so it's a substantial downward movement. We need to wait for some confirmation before expecting we have had a primary degree trend change here. At any stage, a new high above 2119.59 would obviously fully invalidate this idea. Let's look at it at the hourly chart level, where this low here is this point here. So if we've got a new downward trend, we have one and a deep second wave correction here. This wave count here fits much better than the main wave count. This upward movement has a cursory count of 1, 2, 3, 4, 5, 6, 7, which is corrective. A zigzag fits absolutely perfectly. This wave count expects that a third wave down is underway. It's in its very early stages. Minute 3 must move beyond the end of 1 below 2039.69. That's a core Elliott wave rule. Within it, the first wave is probably incomplete. It's just past its middle. 1, 2, we need to see 3, 4, 5. So we'd have at least another couple of days of downward movement before minuet wave 1 within the impulse of minute 3 would be complete. Once the first wave is done, then a second wave correction can't move beyond its start above 2114.86. So what happens tomorrow is absolutely crucial. But primary wave C has its subdivisions seen in exactly the same way as primary wave 3 for the bull count. So, as according to the alternate for the bull count, which I just went over, for this bear count, we could have had the end of cycle wave X or B up here as a huge big zigzag. That is also possible. So the trend change for the bear count could be at cycle degree, initiating a big downward wave lasting 1 to several years, basically a huge market crash, but we really do need to use some other technical indicators to confirm that enormous trend change before we have any confidence whatsoever in it. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.